Hey Facebook family, Jerry Heiderscheit here with the 1 Minute Mortgage Pro. I'm going to run through some real quick numbers with you. A quick warning, I don't think this video is going to be under the 2-minute threshold as promised, where I try to keep the videos between 1 minute and 2 minutes. There's just too much information to go over on this, but I'm going to compare renting to buying. Often we hear that it's cheaper to rent, and sometimes dollar for dollar on what you pay out on a monthly basis, that might actually be the case. On a rare occasion, does it make more sense though? And so I'm going to throw some cold hard numbers here. I'm going to be as conservative as I can. I'm going to try to keep it as layman's as I can. If any of this is confusing, feel free to call me or message me directly. I'd love to chat numbers with you, see kind of why this makes sense. But here goes. So if you look here, the scenario I'm going to put together here. So we're renting a home, paying $750 a month for rent, $20 a month for renter's insurance, with an expected annual rent increase of 4%, which I think the national average is closer to 7 or something. So the purchase price that we're going to use, I'm going to start low end here, and then I'm going to switch it up. We'll go high end in just a minute with more expensive houses. But we're going to say we're buying a $100,000 home, 3.5% down. In this example, we're going to do an FHA loan. The interest rate is going to be 4.25, which is probably about where we're at right now. Rates are kind of going crazy. 30-year term, fixed rate, and then we're also looking at closing costs about $3,500. Now, the homeowner's insurance for the year, about $1,100. The property taxes for the year, about $1,500. Home maintenance, just kind of maintaining the home, we're going to say $800. Years before selling, the national average is between 7 and 10 years. That's what the average household is keeping a house for right now. So again, we're going to stay on the conservative side, use 7 years only. Appreciation value at 4%. Again, the national average is closer to 8. Again, staying conservative. Cost to sell home, 6%, using a realtor, obviously, and then federal state income tax, 25%. So this has been calculated already, and you can kind of look at some of these numbers if you want to come back on the video and really see how this breaks down. I'm trying to keep the video short, so I'm not going to talk too much about that. Same thing right here if you want to come back and kind of see what the breakdown is. But ultimately, between equity, savings and monthly payments, and then tax breaks and so on, you save $51,614. This includes equity in the house as well. So in this scenario, the rent is $750 a month, and you add in the all the other stuff like the renter's insurance and so on, comes to $770 a month. Your total overhead is going to be $72,000 for rent. In this scenario, you're actually saving a little money just by buying a $100,000 home, roughly $9,000 that you're saving in this scenario. But your total savings is still $51,000. That's $42,000 more that you're getting. So let's do a quick demo, and this demo actually has some more expensive numbers. So rent in this case is going to be $2,000 worth of rent, $20 a month in renter's insurance, same increase in annual rent. $300,000 home with a $30,000 down payment, meaning the funded amount is going to be $270,000. 4.25% on interest rate, 30-year note, $7,000 in closing cost. Now I'm going to change these numbers. Actually, no, we'll leave these the same. So $1,200 a year in insurance, $7,000 a year in taxes, $2,000 a year in maintenance. So again, staying very conservative. We're going to change this to years before selling. We're going to do 7 years again, just to stay on the conservative side. 4% appreciation rate, 6% to sell the home again with a realtor at the end of it all, and then 25% of the federal state income tax rate. So scroll down, here's a breakdown again, all of this that you can look at kind of on your own time, but still over 7 years, almost $140,000. So there are some unseen numbers on the back end with building equity and everything in the home throughout your monthly payments over just a 7-year just you keeping the home for 7 years. So keep these things in mind. I would really, really encourage you to follow this page. Learn how to get your credit where it needs to be. Learn how to manage your finances. Learn what you need for the down payment and what you need to do to be prepared to buy a home, so you can put yourself in a position to win to the tune of $50,000 to $140,000 in these two examples, like other millions of Americans have. So look forward to working with you. Jerry Heiderscheit here, 1 Minute Mortgage Pro. My contact information is on the page. Love to hear from you. I love some feedback. Take care, guys.